So let's start with euro dollar. Euro dollar has found a new range, okay? So euro dollar currently between 105.70 and 106.60, 90 pips range. I hope we don't get stuck in this kind of range. We've been stuck in euro dollar ranges for long periods of time. This is where we are at the moment. 105.70 is the cycle low, the lowest since December 2015. Okay, so that's where we are at the moment, and 105.20 is the lowest level since December 2015, but we haven't reached that level. Okay, so moment. So below this level, we have the 104.60. 104.60 is the level seen back in March 2015, and that's the 13-year or 14-year low. If we look up here on the chart, above 106.60, we have 107.10, okay, followed by 108.20. All right, and these are the levels to watch. Above that, we have, of course, 110, which is already out of reach. But to mention, if we have suddenly a turnaround from Trump, we could, of course, check these levels. On the other side, below 104.60, we have 103 and, of course, parity, but it's a rough road for the euro to go down. Let's continue from the world's most popular currency pair to next one, pound dollar. Pound dollar is at 124.10. We'll have a special focus on that. New levels here to watch. 123.80 is the next level of support, followed by 123, the round level. Below that, let's zoom out just a bit. So we have 121.70 and 121. On the top side, we have 125.15, 125.80, and 126.70. Okay, the ranges in pound dollar are becoming a bit clearer for now. We'll talk about this pair later on. Dollar yen seemed unstoppable. Look at this huge move. This is election night where dollar yen fell to 101 and then made an amazing turnaround. Anyway, we're currently at 111. Okay, a level last seen quite some time ago. We reached 111.40, which is a very nice level of resistance. Look at this one. Really pretty technical behavior. Last seen in May. Okay, was also then the swing high line of resistance, and the pair stopped right here. Unfortunately, we had news about an earthquake in Japan this week. So, and luckily, as far as I know, nobody was hurt or very little damage. But this sort of helped dollar yen stall, sort of stop and not continue higher. If we do continue higher, if the dollar rally resumes, 112 is the next level, followed by 113.80 and 115. To the downside, we have just under 110. I would mention 109, 109.80 and 107.50 remains strong support to the downside. If we have a big collapse there, 105.50 is the next level to watch. Dollar CAD currently 134.40. It's caught between the dollar strength on one hand, the Canadian dollar weakness from domestic data, and oil prices. So on the other hand, so if it weren't for oil prices, we would have seen the Canadian dollar weaken a lot more. That means dollar CAD pushing much higher. Anyway, regarding technical lines, it's 133.80 to the downside, followed by 132.65 and much lower 130. To the top side, 134.80, 135.60, and 136.35. Okay, currently looking for a new direction, but the trend is higher. The Canadian dollar is weakening. Aussie dollar weakened quite a bit. We had long periods of frustrating range trading with the Aussie dollar. Currently 74.40, which I still see as a line of resistance, followed by 75.20, 75.80, 76.50, and 77. Quite busy up there because we had narrow range trading for a very long time. On the downside, 73.75 is not as strong as it used to be. The round number of 73 is already stronger support. And following below, we have 72.50 and 71.75. And Kiwi dollar currently at 70.60. We already dropped below the 70 level to 69.80, even closer 69.50, and then 68.80. On the top side, we have 71, 71.40, 71.80, and then a leap to 72.65. The Kiwi collapsed quite a bit on Trump's election. And we'll complete the major pairs with dollar Swiss. Dollar Swiss here at 101.20, a level not seen since back in February, so quite a level here. The next level of resistance is the recent high of 101.35, followed by 101.70, 102.20, 102.50, and 103.30. On the downside, we have 1 and 50, and then parity, of course. Parity remains a strong line, followed by 99, 98.50, and 98. So dollar Swiss mostly reflects the strength of the US dollar, and well, the Swiss National Bank intervenes, but probably not too much. Okay, so this concludes our major pairs for now.